If you get your money back on the put and you've been waiting a while and you regretted buying the put, lock your profits in. Get out of it with minimal losses. And there's no shame in doing that. Should we go lower from here? We could. That's the plan, right? It's easy to say we can go lower from here. We're opening 4%. But also, we have rising wedges, which are the right hand side of harmonics. And the rising wedges usually break down. The matter of when. When you hit significant resistance, you tend to falter a little bit. The mega caps are at the upper right hand corner of my screen. That's a fairly fast chart. I'm going to switch it to 3 minutes to slow it down a little bit, give us a little bit more perspective, what to expect, how high we are, how low we are, all the stuff above us. And I will do the same on this one, which is the collective of a bunch of ETFs. So you can see how this one is also the red streak is a bearish setup. Not every bearish setup plays out, but this bearish setup says don't hold calls without good reasons. Time for push-ups? Not right now. I'm doing like 2 or 3 things at the same time. I did push-ups in the morning. Bearish momentum rally for now. Wow. I don't know what that means. A bearish momentum rally. You mean a snapback rally inside of a bearish momentum trade? 530508 from August 5th. Yeah. So we have a confluence of a bunch of important levels. Well, okay, so I'm not so sure I can trade that. So you're saying we're going lower, a lower low, Danny, than last night. Yep. I think it's too early to say that. I think this is a chicken shit world, and they will try to appease the crying babies that are in the market right now. Ah, my God, we got red ticks, and they're going to give them some medicine for now. So don't be too hasty shorting things just because we're up 4%. We are in a bearish position right now, but it's based on solid metrics for 5-minute charts. That's not to say what's happening tomorrow or the day after or a couple weeks from now. So the credit call spread from this morning should be still okay, right? Yeah, it's still okay, profitable. Let it do its thing. The odds of spiking 3% from here without a new quote headline, real or fake, is are low. So if you tell me that there's not going to be anybody spewing some garbage out in the news, that trade should play out. And the 2 green lines are pivotal. They were the first area where the bears today could have put some limits on the bulls, but they couldn't. They allowed the bull to breach yesterday's spike high, which was pretty significant. So could that have been a bear trap? If you want a visual of it, give you a quick one. This is the SPX, cleanest look on the S&P, no overnight junk. You look at it, this can qualify as a bull trap, although a little bit too slow for my taste. Usually they're shorter in time, but let's see if we can do this arrow today. Okay, so that's the scenario we're looking for. If you're holding a put for this morning, it's early enough in the day that even if it's down, you might recover your profits if the charts play out. Now, sometimes you see what you want to see in these charts, so don't be overly exuberant in your trade setup. Don't have too much conviction in your trade setups. I said it earlier today. Those of you who were holding calls overnight, good job, but you got lucky. And those of you who were holding puts, you got unlucky. No one knew where we were going to open because we were in headline mode. I prefer to trade when the market opens if I'm trading fast. I don't have the conviction to hold risk completely unbalanced overnight. It's too much of a gamble. These days, it's too much of a gamble. Literally, somebody messaged me, they are gambling. That's why they posted in private with $500. So that's somebody that says, okay, I'm comfortable enough throwing away $500 for a letdown on this. I'm okay with this. The market is open. They're not blindsided with the where we're going to open. They're gambling with the market open with $500. I don't do stuff like that overnight, but I don't mind doing it here. So what they're doing is putting my trade setup in action using a lottery ticket worth $500. Okay. And the amount should not influence how much you put at risk, because $500 to them might be chump change. $500 to another person might be a pretty good chunk of change, half their mortgage, if they're not living in California, but we'll see. So what did I do today? I closed some winners. I went through my account. I can buy back the puts I sold yesterday for $140 of profit in NVIDIA, for example. I'm not compelled to do anything right now. I'm debating whether I want to re-engage short on Berkshire or not. Not because it's green, because it's green into its all-time high, 5% away from an all-time high. Somebody said, why are you shorting the best companies on the planet? I'm shorting a chart, not a company. Now, United Airlines, I was shorting a company. Okay, what did I miss? What scrolled off the page? Which question scrolled off the page? By the way, I'm streaming on YouTube in case you want to watch me somewhere else. What? Mm-hmm. Pretty intense week. Joined late. Can you share winners you closed? Sure. Let me see if I can remember. 3M. 3M. I was short by selling calls and buying puts. I closed the puts yesterday or the day before. I can't remember. I closed some credit call spreads today for 5 cents. That's one. I could buy back the put I sold yesterday on NVIDIA that I shared. It's up $145, $150 per contract. And I think there were a couple of credit call spreads that are dead. They might, like VOO. VOO shorted that. And it's pennies. XLV calls are long. The XLV calls, we took a bullish position on the XLV. The it was a combination trade, and it's showing a lot of profits, but yeah. So the debit call spread is up 15%. So tangibly, that's like $33 per contract. I don't know how many you took, but that was completely paid for by the credit put spreads we sold, and that's up 15% of its maximum gains. So that's another $35. So you would consider one unit if you did 6 credit put spreads and 1 debit call spread. That was one unit. It was zero out of pocket expense. That whole thing is up like $80. So if you closed everything you took, you'd make $80 per unit. I don't know what that's worth to you. Totally okay to scalp it. You understand what I said? So the XLV trade was kind of complicated, but not really. I said, okay, maybe we can go along the XLV for a bounce. And I said, I don't want to pay for it out of pocket. So we sold the put spread to we completely financed the debit call spread with it. The combination of I thought I had it on a picture, of the credit put spread, 6 of those, 1 debit call spread is a winner. I'm going to go 30 seconds on the QQQ. Again, if you took puts on the QQQ and you didn't stop out, and let's say you were super red a minute ago and now you're not super red anymore, one thing you can do is reduce your exposure or completely get out if you were hating it. It's okay to miss out on profits. Here's a tangible win that people don't consider. Your mindset, your health, your happiness, your anxiety. You can't put a dollar amount on it. If 10 minutes ago you were extremely upset and now you're not, isn't that worth money? All right. I did not price the put when we started talking about a put. I don't think we're making money because they did exceed the starting point. So if you did, let me know what you end up doing with that. So I can speak to it, because I think we started speaking about a put somewhere in here. And this was half of target 1. Believe it or not, it's a 5-minute short that this is half of target 1. Let me tell you what target 2 would be. Quiet in the cheap sheets. Puppy's getting anxiety. Yeah, we're miles away. 510 is target 1. Okay, that's a 5-minute chart. 510 is target 1. So if the bulls cannot make another high and make a lower low, come down to 519, 520. I can't believe I'm saying these numbers. They are so far apart. This is insane. It's exciting, but it's insane. 519 and a half. 519 is an important fight zone for the Bears to win, as long as they can hold the bulls below yesterday's spike. This was yesterday's wee spike. This one right there with the words jubilation. If you can keep them below 523, give or take, bring them down below 520, 519, 518 and a half zone would be a decision-making process to get this half of this orange arrow done. All starts with if you can keep them below the red line. I'm going to mute myself. I'll be right back. This is progress, but this is the continuation of the fight. So if they do put a fight and they bounce, so what does this look like? This red path, white path. They would kind of draw head and shoulders where the target of which would be about middle of this yellow. So it's not saying anything different than what I just said. Okay, what happened is that my W on my screen was pointing down. W is always pointing down. There's no way my W was pointing up. What are you talking about? If you're talking harmonics, W's always point down and M's point up. Okay, so those of you who took the credit call spread this morning, you should have 50% of your profits at least. If you want to avoid being headlined, lock it in if it's large. The Qs also, the puts are back alive. This is a follow-up on the conversation from earlier. The Excel posse should have a lot more. Here's a statement. So Excel this and that, they're all inside one. If they lose this, I'm going to put an alert here. I can't tell you what value it is because it's a bunch of ETFs. I can tell you what level. If they lose this line I just put in green, the markets will be at the tip of this yellow arrow. Unless there's a rotation inside the mega caps. I'm not sure what you mean by codes. All right, welcome aboard. Thank you. I am streaming on YouTube, by the way. Oh, absolutely. أهلا وسهلا معلم. ارتاح عود. Oh, you paid for it for with today's profit. How about that? I love it. Yes, that's how it works. You belong to the group, you make money. Who cares what it costs, right? I'm glad you're seeing it that way. That's the way to see value. I appreciate it. In case you don't see the Head and Shoulders, not that it's important to the trade, it's not. It's important for you to measure. Head and Shoulder is not a study, so this can go up to here or a little bit higher actually and still be okay. Why does this not snap automatically to match to close it? That's what Head and Shoulders look like. They can be slanted a little bit, especially this way. The gods of technicals tell you that it's about this much. That's what I said, half this arrow. So I don't need to put it on there. It's just visual noise. But some people need to see it. To me, it's all about levels. This level we're fighting for, you can move it down to here. This level, I can move it up to here. So we'll move that one to fuchsia. Fuchsia is bad. This is the opportunity for the bounce. Or if you lose it, half of this comes to fruition right away. This will be the target of that loss. I'm not going to put it there. I just want to visualize it. This discipline I'm gaining. Yes. Discipline is usually what somebody's saying that they learned discipline from me here. Discipline is the difference. I promise you that most people know how to trade. They just don't know how to manage the trade, whether profits or losses. And the common mistake is they cut their profits too soon and they let they hang on to their losses too long because they hope it's going to turn around. The bottom line, if you do it often and if you do it long enough, you gain confidence. With confidence comes the fact that, hey, I'm okay missing out. So you're no longer looking for a perfect execution. I'm going to take this out here and check on it. So this is the QQQ. We thought that they would have a problem from 440, but they overshot. Now they're going down to the place from which they overshot. Not a bearish situation, which is why I said if you're holding a put that went red and now you're not red, you should cut it to size or cut it loose. I think the SPY is easier a short right now because it has actually they're both equally. Tuition, yes. Back in my day, I had no rooms like this. It was all tuition. Like I got hurt to learn. Some of the lessons I said, and they didn't hit home to some people because some of you have said what happened to you happened to me that I have communicated to you before. I was hoping I would be able to relay the message a little bit louder, but like the margin calls where you have a trade and it's perfectly fine, but the broker forces you to do something you don't need to do, just so they can cover their ass. I learned that lesson, and you sign off. You give them that permission when you open the account. Oh, you're welcome. I don't remember it, but I had a few. It's been a busy week. Busy good. I said I'm proud of this group. This is the smartest group we've ever had. Judging by the level of panic messages I've got, it's a handful among hundreds, if not thousands. Like we have 320 people here, probably more today, and I haven't had one crisis comment today. Just two comments of people saying I was in trouble yesterday, I'm not, and I'm acting on it today. Music to my ears. I have 30 QQQ sold naked plus for December 19, which I closed. Okay. You don't need to say how many. Okay. Yes, we do have ballers in here. They just don't say anything. I'm looking down the list of stocks. They're all green. All of them. Oh, we wanted to see the heat map earlier was broken. Está verde. Couple of days ago, it was hot pink. Let's go look at the broader. Oh, there are some pockets of weakness. Beep. Okay, I just set that alert. That's that green line right here. Not good for the bulls. So are the puts green yet, please? Somebody? I did not mark the cost of that put this morning. I was a little busy. It should be green. No? Okay. Dang, that's not good. The highest put, the highest dollars that I'm seeing transacted are at 515 and a half, 515, 516 on the SPY. So maybe they want to go there. That would match half of target one of the 5-minute bearish harmonic. The highest put transacted on the XSP is still $15 below current price. It's worth 12 cents now. Whoever transacted it earlier, 200 contracts for 7 cents, doubled their money. 200 contracts. Now they're 412. We have a bunch of calls, not a lot of puts. So that's not good for the rallies. When everybody's piled into calls, market makers are not going to give you payouts from 4%. How are the puts not green yet? I don't understand. Okay, Freddie's making money. Okay, the Q's hit my arrow. You see that? So we call that done. Those are definitely green. This arrow played out on the Q's. So I'm going to go back to 5 minutes on the Q's to get perspective. Oh, stay short. Stay short. If you have runners, keep them. They might pay huge. We might go another $4 to $5 lower on the Q's in a series of lower lows and lower highs. It all depends on what we do with the bounce. Let's go back to 1 minute. And the levels we're looking for, 440 and a half, give or take. So I want to see what they do with the bounce. They hit my arrow perfectly. You can see it. What I want to see is what they do with the bounce. What happens inside here? If not, they're going to continue lower to hit a higher time frame. Like I zoomed out to a 5-minute chart, 5 or 10 minutes, it pointed much lower. But there could be bounces inside that. So it could be a series of selling rallies. We don't know. We'll see. This played out perfectly. Will it repeat itself? That's the question. Let's see if I can get you some fair value gaps. I'm going to move this guy down to here. No fair value gaps. They're all closed. Wow, that is a crafty drop. Not one open candle on a 30-second chart. That is a crafty bearish chart setup. This is not good right here on the left, pre-open. So maybe we go investigate that zone. Tom, now closed or close to green? What were you saying? If we break the orange box, yes. But these days, those orange boxes, Eddie, are huge. So none of the typical rules I will follow today. This is an unusual environment. The VIX is at 35. Nothing is typical. So I modify. So this green M on my screen has a target 1 of here. I still think that the sellers might show up at this level, so I'll keep my pink line where it is. The options chain has been pretty misleading. So it's hard to say gamma levels this, and Traditix for 2 days has been not usable. They need to figure out their stuff. They need to have a mode for volatility because it's unusable stuff right now on Traditix. So be careful what tools that you usually use. You should modify them a little bit. They won't work the same way. Mega caps might have a bounce. Let's see who can lead us. Wow, good job, Microsoft. We're long that too. Do we have profits? I don't remember selling a put in Microsoft naked, so probably not. The XLV probably will end up at 135 today. That's like $2 lower than where it's at, $2.20. But Nick, you're long. Yeah, I am. I told you can trim. So here's the craziness of like, look at Mongo today. I'm not going to put it on my screen. Pull it up on yours. Pull up a 5-minute chart on MongoDB. So it will probably show you 2 days worth. Yesterday, 140.8 low. Within minutes, 159.4 high. Within minutes, back to 146. And now we're at 155. Utter BS. And you get these are amateurs. This is a kid market. We're going to take candy from the kid. What are the blue and green bars on the left? Wait. Blue and green bars on the left. Blue and green? Blue and gold? My charting is on point. I'm glad you approve. Thanks, Raul. Yes, you will love that event. What is the blue line? The blue line. This thing? It's a moving average, 300 periods. These bars? Okay, are you sure this time you mean it? Yes, these bars? You said blue and green. That's blue and gold. I know I'm a little bit colorblind, but that's gold. So these two, these are volumes. Yes, volume bars. And this is called visible range volume profile. Volume profile is the study. Volume profile. Everybody has volumes here, right? Like when did the volume occur? If you take that information, pull it up on its profile, and you can put it here and tell me where they happened, wouldn't that be more useful than what time? Who cares what time? I want to know that 522 is the happiest place on earth for today for buyers and sellers. That's where bulls and bears love it the most. So if we rally into it, it should be resistance. So it's called visible range, VR, VP. Visible range meaning if I zoom out, it'll adjust. It'll show me for the period of time that is visible on my screen. Anytime now, TradingView, please. Thank you. There we go. I zoom in, it goes back. So if you use the visible range feature, make sure that you're judging it using the extension. Like I should make sure to show the whole overnight session to judge the volume for the last, say, 12 hours. Otherwise, I'm seeing an incomplete picture. Like right now, I see, oh, nothing happened here. Well, they did. So I need to zoom back out. to capture a period of time where market wasn't closed. So anyway. Oh, for fudge's sake. This thing is starting to do a thing again. Hey, Andrew, what was that setting on Windows? Dynamic. Dynamic lighting. Dynamic lighting is off. Why is it starting doing? Okay, so this green M that says we could rally to this pink line will be null and void only if we lose 516, 516. So I'm going to move this down to that level. If we go below the green one, the odds of finishing the arrow become a little bit stronger, because if you look left, pre-open, this was a pretty steep ramp based on something that happened in the pre-open. And this also will negate this upside need. Yes. You can do anchored and you can do session volume profile too. For me, it's pretty handy. I don't use the volume profile as religiously as I did before, because we've gotten so strong with the extensions. Like what we're drawing right now, we put arrows, they come to fruition. I rarely need to resort to using the volume profile at this level. I do use it indirectly with regards to seeing the volume on the options, which is more important. At one point, I will try to chart that on the chart, combine a chart that has both. But I don't think TradingView still has or has that data yet. They do have options data on there, but I haven't figured out how to put a chart, overlay some options data on the chart from TradingView. So I may have to do it in some other format. And if I do, it will be an amazing tool to stream on the Discord, and I will do that. Maybe that'll be my next task. It's going to be a lot of work. but extremely useful information. Where do you see the call input volume? Inside the options chain. Open up your trading platform. Click on the options chain for the ticker in question, in this case SPY, very liquid, very high volume. There's one for the SPX as well. Train your eyes to look at the data and read it. In my options classes, we go over that. Can we get it on TradingView? I don't think so. They have options data now, yes. But I don't think you can chart it. You can chart each leg, but you can't chart the actual transactions yet. Don't know if you're familiar with MethodQ. I am not. But they plot GEX levels and MentorQ. Yeah, a lot of people do that, but it's still a manual process. Thinkorswim has a setting from Fun with ThinkScript, but you have to actively do something about it. Yeah, but they push it out. They manually put it there. And you subscribe to their like I can make this chart available to you somewhere else, which I may actually for a certain group of people that subscribe. I might do that actually. Share a couple of charts live. This way you can see my comments live. It updates for you, but they manually put it on there for everybody. Somebody actively puts the data in there, is what I'm saying. What are we talking about here, folks? What can I do on TradingView? What are we talking? Okay, so we have half the yellow arrow. Tell me you don't have profits on. Yes, you can share charts. Tell me you don't have profits on that. You do, right? On the puts? Okay. So if you bought puts and you made 40%, lock in your profits. Lock it in, which means walk away from it. It was only one put. Or if it was 10, leave a runner. And to me, a runner is 1 or 2 out of 10. If you had 2 and you closed 1, the leftover is not a runner. You just scalped. Okay. Targets. The target is much lower, like much lower. The buy sell markers, yes. What about them, Sandy? Is this Sandy G? What event did you go to, Sandy? Did I give you permission to it? I'm speaking to somebody in private. Okay, so this is the way you get it is you click on indicators, go to invite only. It should be right there. Right. I know who you are. So click on indicators. Go to invite only and scalp priming. That's me. You should be there. If you stayed short on my mark on the cues, let me know if you don't find it. Lock profits. I'm not the one to manage your profits for you. We set it up properly. So go to YouTube and give us kudos. This morning, the open was fast and furious. It took us a minute in order to get our bearings straight. We zoomed out. We found a bearish setup on the 5-minute chart. We set it up with 2 arrows. You can't see the second one. Then we zoomed in to monitor the process of the topping formation. And it was a topping process, not a V, inverse V. Then we saw a similar bearish setup on the QQQ and gave me confidence that there was also bearish setup on these guys. I drew a line. I put an arrow, an alert. They both triggered. So now the easy work is done. Look left on my screen. Okay. So the same concept of us rallying into a prior fail from yesterday, we're falling into a breakout level from this morning. So this should be some support, as the line says, support. I believe these were pre-open comments from me. Okay. So what's working is a 5-minute harmonic that has much more downside, but we're in it to make money, not all the money. So it's okay to only take half the winnings and leave the other half on the table if you don't have enough to keep runners. And Eddie, yes, the orange box was breached and we were given already half of it. So that answers our question, right? So the bounce, let's see here. So this white squiggly came to fruition. I will delete it all. Actually, I will not, because we want to see if it wants to repeat itself here in a similar shape. I wouldn't mind seeing a bounce. Actually, let me delete it. It's visual. It's not correct. So there should be sellers inside of here. And that should be target 1 of 2. Target 2, I'll bring this one here. That's target 2, and that will be target 3. So as long as we stay below these 3, these 2 slashes, we can come back and retest this support zone we just placed. So the bulls do not want to lose this support zone. So we will have a balance. Is how high will it go? Hi, Nick. I missed the last few days. I'm up 2,800 today. Ooh. Somebody just asked me, hey, compile some of these messages. Hot diggity. Yes. Thank you. Welcome back, Pamela. I don't think the rally should make a higher high for sure. But it's okay to have rallies inside of a descending channel. Let me zoom out and show you what we are trading, 5-minute charts. We are trading a bearish setup on this. I'm not one to ask for 504 or 505 today. It's not too much to ask to get to 512, 13, 11, something like that. However, I realize that with the hope of a headline it's hard to get a lot more downside than what we got already, because this is an idiotic market. They're hope is a powerful motivator, and motivation to do nothing sometimes it means that there's no easy downside. You're in calls for tomorrow. Whoa, okay. So you know something about tomorrow I don't. Um, okay. The IWM is underperforming today, 1.3%. So let me share with you my experience looking back 20 years at least 20 years of active trading. The IWM leads the S&P in size of move. The old school was if the S&P is up 1, the IWM should be up 1.3, 1.4%. That's how they move faster. And today they're shyer. They're underperforming. Like they're more shy. Two ways you can interpret that. Ryan's going to make a lot of money because there's a catch-up trade, or the IWM is saying, "Where y'all going? You guys should be down here." CPI gamble. See, that's Vegas. That's not me. What do you know about the CPI? How would you say why would make you go long, not short? You don't think we're going to have inflation and react badly to it? See, I don't do that. I'd rather play the trade tomorrow morning after it happened without guessing. It's just not me. I'm a bad gambler. I see you, Yazan. Thank you. Welcome to the family. I bought something on AliExpress. And that was an experience. I think that's my first time. I'll bet you $100 you're not that bad at gambling. I do okay because I'm very conservative. I don't gamble often, but it's definitely not my jam. Credit put spreads, no. I don't trust these fools. I honestly don't. So I said 512-ish is doable, the 513, 511 zone. And these days, believe it or not, like I said this morning when I was doing the morning write-up, I felt stupid putting in decimal points. So I would see a fair value gap that had like a 0.4 on it. I was like, really, Nick? You're going to put a 0.4 on these when they're moving, $4 in 2 minutes? I felt stupid doing it. So, but this range, if you look left, is a support zone that is halfway through the bearish setup. Ryan, that's why we shorted this morning. The morning short on the S&P was based on this 5-minute S&P bearish harmonic where we got one of two arrows. And believe it or not, those two arrows are target 1.2. Target 2 is 50.60 on the SPX, which is closing the whole gap. I don't expect that. I'll be happy if they come down to 51.12. That would be orderly. They would have covered enough of the gap to where it's not really a gap. So I have this upside harmonic. Let me see, what do you have? Okay. But that harmonic has a stop at 513 and change, I'm guessing. I can't read the tiny writing. Right? So below 513 and change, that harmonic breaks apart, which is what I'm saying. But it doesn't really break apart. You just have to modify it. So all I'm saying is we're selling rallies for the last 30, 40 minutes. That's what the harmonic says. We're selling rallies, right? That's it. So if we finish the first arrow, if we finish it, we will sell the next rally to start the next arrow. This box down here, this one here, I drew this yesterday and I modified the range yesterday after the crazy move up and down. I was like, okay, we need a tighter box to keep us in check. And that made us money yesterday, like big time. So you can consider that whole orange box once we approach it, if we approach it today or tomorrow, as a support zone inside the massive reaction yesterday to whatever headline, I forgot what it was, during the day. So we are ready. We have lines and boxes above, levels from today, and levels above from weeks and weeks ago. This red box I added this morning, that's an open fair value gap up there. It's resistive. And we have boxes below that are near term and old. These two are super old, I bet. I don't remember what this is. May of 2024. This is a year old. What did it say? Several tails. Tails are fight zones. Like if you have a candle and you have a stick on top or a stick on the bottom, those are tails. So it's evidence of a buyer or a seller. Thanks for the help over there. This is a very, very loose market. Loose as in they freaked out so much that they created a big elastic zone. Remember how I said a couple weeks ago, these moves are like an athlete stretching before getting ready to do something crazy? Remember that? And I said it's either a big rally. I said that we're either up 10% or down 10% or 12%, I may have said. And then within hours, I said, if you twist my arm and say, which is easier, up 8% or down 8%, after the March correction, I said down 8% is a breeze. And if we lose the 331 lows, we will go 8 to 12% down. And that's exactly what happened. So now we have like really elastic areas. And add to it what happened yesterday, it's basically we're inside of soup. There's no real hard line support and resistance. But yesterday's low better hold. That is support. That is a hard line. That's the edge of the bowl. The soup will spill over that. Close the credit call spread. Nice. Are you coming to Orlando, Deb? I can't remember. You are. I remember. Yes, I do remember. Are you getting excited? We are. It's an easy win, Ellis, right? There's another new person. How do you like it so far, Ellis? It's great. Look at that. Brand new member. On the puts, totally trusted. There we go. Can we deploy another put if it reaches the green line 516? You can, but let me verify it, okay? Totally trusted in what you're seeing. Like, didn't a little bit of a drawdown, but paid out. Nice. That's good. Let's go send it to Twitter. Mm-hmm. Do you review your setup at the courses? Computers, monitors, brokerage tool? I can. What do you want to know? Computers. Don't buy what I have. Okay, I'll tell you what I'll do if I was setting up a rig right now. And this is a little bit outside the box. Listen to this. Now, follow me on this one. 2 or 3 microcomputers that are super strong. Each set can support 4 monitors. I would have keyboard and mouse that play 3 machines, and that would be the MX Logitech MX something, MX Master 3 on the mouse, and MX keys, the big one. And I would have as many monitors as you need. I need 2 or 3 for me, but I have 6, 7, maybe 8 large ones to support your questions. I don't need 6 or 8 to trade. I just need 2 or 3 tops. But because I answer so many questions, the more monitors, the less I have to switch windows. And the kicker is one of those would be portable desktop so that I can pick it up and go on the road and have 2 double screens, 2 or 3 double screens that look like laptops. So then I would be fully mobile with a full workstation with 6 windows on the road. But I don't know what you need. I do have a laptop that has 2 screens in it. I don't recommend it yet. Buy the next version. Asus. I've sent it for repairs twice. So I bought 2. One is fine so far. One needed repairs twice. So Asus, questionable quality. But it is cool. It has 2 full-blown screens. Brokers, that's up to you. I use E-Trade, Thinkorswim, Tastytrade. They all suck at some point, and they all have advantages and disadvantages. Thinkorswim, I would not live without because it has an unbelievable charting resource and dynamic links outside of itself. So I'd be really sad if it goes away. Tastytrade is the easiest one to get approved on. If you want to go there, I do have a link. They will pay me for your subscription, or somebody else can share their link, like Arlenis if she's here. Tastytrade approval process is the easiest. There is a company out there that makes really portable computers that are microcomputers. I haven't tried them, called Khadas. I think it's Khaddas or 1DAS. They think outside the box. They're Apple-looking like machines that run Windows. Check them out. I have never tried them, and they're not cheap. It's like $1,400 maybe for a base model. But they're the size of a book, and it's a desktop. And it has, I think, an external GPU plugin. You're thinking about going long the VIX. I don't trade the VIX that way. If you need protection for your portfolio, I guess it's never too late to buy insurance. But the VIX, the no-brainer is probably shorting the VIX up here with a sold call spread for 2 months. But we looked at it yesterday, and it only paid $50. So I said pass. If the VIX collapses back below 16, I'll go long in a big way, like we did before. Sell puts, buy calls. I don't have an easy trade on the VIX here. I mean, you might make money. I just don't think it's a good trading vehicle. Also, you guys need to be cautious that the VIX itself, the options expiration cycle is different. It's Wednesday, and it is AM settled and it is cash settled. So the good thing is you won't get assigned that settles against cash. And on Wednesday, when it expires, you cannot trade it. It settles at the AM. Is today Wednesday? No. Tuesday. Whoa. Sneeze attack. That was violent. So the reason I said no to the VIX, if you've been to one of my classes and you heard my spiel about defining risk, everybody knows risk size. How much can I lose? The other part is, what are my odds of winning? I don't feel like I have an advantage if I buy the VIX here. So me buying it or selling it is an iffy thing. All right, so we're pushing through resistance level 1. I think they're going to go to 521 or try to. They're going to try to go to 521. In the next couple of minutes, we'll see if they have it in them. There should be a lot of sellers here and 519. That letter R is legit. Okay, no problem. I only had the problem with you holding them overnight because of a CPI thing. Doesn't seem scientific. All right, so I gave levels on Tesla this morning. Nobody came back to me with questions, so I assume you guys are doing well with it. Let me give you 2 numbers on Tesla if you are trading Tesla. 260 today. Yes, 260. That's $14. Would be typical. And or 232 would also be typical. 2 sub numbers inside of that. 235 and 253, 254, 253, 54. Those are numbers that are significant with regards to range. If you looked back 30 days, on average, these 4 numbers are doable on a daily. And it's right in the middle of everything. So you go long, you're guessing. You go short, you're guessing from that perspective. But you may be long or short because of other things on the chart. So if you are trading it and you need help, let me know. The bulls have a tailwind inside this area. They have a tail, so they're trying to eat up of this as much of this area as possible. People on YouTube, we don't have a lot of people on YouTube yet because we didn't advertise it anywhere yet. We have 310, 315 people inside the live who are paying members, most of them. Consider being members if you're on YouTube. So this is a cluster of buyer sellers right there. You see that in the charts? There are no open candles. They're all nicely closed, but you can see here we had a stretch pivot, like pop, pop, and then another one here. So anything between this one and that one. Let me rephrase. You see this orange box? That's my opening range, mine. Once we fall out of it, almost always on a closing basis, we try to get back into it. We didn't here. We just fell out of it, and actually we did. We defended it one time, and then we fell out of it. Almost always it gives us half of its value, which it did, or all of it. So let's see how much of itself did it give us. It gave us exactly half. Okay. So here's the statement. If they cannot get back into it, it's just like a breakdown. You drift lower. And if you lose the support, you're almost guaranteed the full extent of it. So this is normal price action, trying to get back inside of a range they lost earlier today. Again, this box is the bulls are trying to get back into to avoid this number. If you wanted to buy puts here, you can, but make sure that it's not large. We are still in headline mode. We could still get a knee-jerk reaction up or down 2% in minutes, if not seconds. My next charting class is TBD. We don't know where yet. We know when, roughly. So the classes we have coming up is next week, April 17, 18. We still have 2 spots in Orlando. That would be futures. That's a heavy load. 4 times, no response. Okay, what is the question? SPX price is increasing, but the 53. Okay, so if I'm holding a credit call spread and the SPX is rallying and my premiums are not increasing, a few factors go into there. 1, time. How much time has elapsed since you looked at it first and next? 2, the market makers don't believe it. So it's a bull trap. And 3, the VIX is falling fast. Any of those or all of those combinations would cause the SPX not change values on a credit spread or a debit spread or whatever. Any options prices that should be moving and are not moving, those 3 factors would explain it. Either time elapsing, the VIX itself falling, which represents less premium from market makers across the board, or it's just the market makers themselves don't think that we're going to continue the way we are. Therefore, they're not going to price it up. Buying puts here is what expiration dates. Okay, Paul, because you asked me that, I'm going to tell you that if we're trading on a 30-second chart, it's always today. These are super fast setups. And maybe you should just watch for a little bit to get the groove of it before you deploy risk. And when you decide to deploy risk, 1 contract. So I'm going to say a caveat on that. Today's 1 contract is not the same as normally 1 contract. I'll give you an exact idea why. Let's say I said, okay, let's buy a put here at 518. Expiration today, it's $365. $365 for an S&P SPY put on a normal day. Normal meaning the VIX is 20. Its mathematical value 19.5 or whatever it is. That would be $100, $110. So it's a tough lesson at 365. Yesterday we did it extremely well. We recorded it. It was amazing. We paid $400 and we made 100 and something out of it. We paid $500. We made $160, $150 out of it. What strike? So when I say we buy a put, I usually say which put. In this case, I would buy an at the money put. I would have bought a 518 or a 517 put. Um, so that would be the trade setup. So if you want to learn this and you're starting today, I'm warning you that today is not the easiest until we calm down. My arrows are accurate. Yesterday we nailed it. And the stops are based on you. Early in the day, I am brave with my stops. Late in the day, I am not. So, how does one stop out? If I spend $365 on a put or a call, I may say, I'm only going to allow myself to lose X. And that X can be a dollar amount, a percentage, up to you. Everybody has different risk appetite. Or I will close when I'm technically wrong. Like something on the chart happens. I lose a level. I see volume. I see a harmonic. I see something that says, oh, maybe my thesis is wrong. So the decision process would be thesis right, step 2, stop loss, stop gain, step 3, odds of success. Circle. It's a whole circle. That's the constant decision-making process, whether you should close your position or not, for profits or for loss. So testing it out with one contract for a few weeks gives you confidence that, hey, you know what? I can do this. Let's make it 2 contracts next. So you turn making or losing $20 into making or losing hundreds of dollars opportunities on a daily basis. And that is what an active trader does. They become confident in a repeatable method that is a no-brainer. This happens, I do this and this and this, and then I monitor this way, and then I exit that way. Rinse and repeat. I can make $300 a day. I'm a professional trader. Whether I do it full-time or not, it's up to me. I log on, I can generate income, I log off. Now you're a professional trader. You have the means of creating income out of you looking at charts, regardless of what the market is doing. We could be 6,000, we could be 3,000. You can come in and do the same thing. It's very freeing to have that ability. It's like game changing, but it needs to be repeatable. Like right now, we're up 30%. We're up $100, $110 on that put since I mentioned it. Log off. Boom. If you did 10, you made $1,000. Just from this, while I'm explaining it, it paid us. YouTube. Cheers. How long it took me to become consistent? I don't know. At some point, you make the turn. But you can trade in a group. You can benefit from the consistency day one. We do this all day, every day. This was not a recorded commercial. We are live. Somebody's asking on YouTube. So now this drop was a little fast. If I zoom in, I bet you I can find a couple of holes inside the chart. Yeah, that red line or a little bit higher might be a little seller at 516.5. It looks like the bulls are going to retest this guy right there. And the support at 514. Wow, the DAX is up 2.4%. Thanks, Larry. I appreciate it. Cheers. Beers. It's too early for beers over here. It is 8:50 in the morning. I can make a cheers with a drink. I have a drink on my desk, but it's definitely not beer. I actually drink less coffee when the market is going bonkers because we're amped up already. The other day I was talking and somebody say they violently told me that I was off the chain with the energy level. That's because of all the energy that was going on in the room, so I pulled back on the caffeine. Never too early for tequila. Well, if you like tequila, sure. Let's check the portfolio for a little bit. The active front facing portfolio. um, all the longs we took are still viable. I can take any of them today, even if they're not perfect. The one that is most annoying is the trade desk. I can't wait for them to assign me so I can book the $700 loss and move on with my life. Today, it's working in our favor, it's fixing itself. I'm not doing anything with it. I can't wait for them to assign me. Come on, do it already. I may buy some puts into earnings if I still have it open into the earnings. The XLP trade is showing 600%. It's a little misleading. Whoa, the credit put spread is showing it's down to $7. Let's see here. Is that a real number? A debit, close, sell the close, buy the close. I would be shocked. Replace. No, they just changed the quote. Yeah, that was a mistake. Misquote. I was like, there's no way. Yep. See, liar quotes. Liar quotes. I go to close it. It goes from $7 to $39. I'm like, whoa, I'll be closing that right away. Rum. Nice. Sure. Let's check KO. KO was up today on an idiotic knee-jerk reaction. Shortable zone. If I'm short, I'm not exiting my short today on Coca-Cola. If it goes up tomorrow, I will add to my shorts. If I didn't have puts, I can buy puts today in Coca-Cola. Here's my thought process. It's rallying with the market, but if the market drops, Coca-Cola should also drop. And it is not a superstar company. So between here and 71, there's a hard seller. I am done with Coca-Cola for myself. If I had puts and they're winning and I'm sick of it, I would exit them and reshort if they make another high. So I'm going to put an alert to reshort higher. The chart is not actionable with confidence. They have proven themselves inconsistent with their logic. So what do you have? Do you still have puts? I'm speaking to somebody. Did you close any? I think you did. How many left? Okay. Are they still green? You're up 100%? Okay. How about you sell another one? Keep two. That's amazing. Oh my gosh, I'm so happy. Easy decision. Will I look at NVIDIA 1 minute chart inverted hammer prior in this repeatable pattern? Let's look at that. Let's look at that. Hold on, let me check. I didn't miss any more questions above there. On that note, the charting class. Oh, okay. So the April, is that Mid-May would be a trading class. Everybody's anticipating that. That's a little bit of everything. You would not be wasting your time. You'll meet me and Mert. Climber will be there. 2 people. You get 2 people for one session, 2 days. Mid-May, mid-June charting, mid-July options, mid-August futures again. The cycle repeats. We don't do crack ever. No. Yuri, SQQ, April. When should I go in? I don't trade the SQQ, Yuri. You want to short the market? Okay. I don't know why you want to do that. The market just fell off a cliff. Oh, you want to buy a put in the SQQ, so you're going long the market. When should you go in? It's like a thing. Like why? What? Can you ask your question differently? When should you go in? You're asking me for a ticker, you're asking me for a put, and you're asking me when. So you have a thesis? What is your thesis? What makes you think it's the right thing to do, I guess? Will you look at the NVIDIA? Yes. Upper right-hand corner, NVIDIA. That one, yeah, that's a problem. Let's see if they take it. If NVIDIA goes to 104.5, it probably goes to 106. And if it goes to 106, it can go to 108. If it goes to 108, that means the market is rebounding all the way up here, my guess. So let's see what it does against 104-ish. 103.4 through 104.4, NVIDIA is important. Is that what you're asking? The market is going up for a short time. 2 p.m., it hits the fan. Oh, so you're timing it for a minute. Why are you using April? Why aren't you buying at the money calls right here? I don't understand. Why aren't you already in calls if you think we're going up at 2 p.m.? Why? What's going on at 2 p.m. today? Okay, so buy tomorrow's calls. Why are you going all the way out to April if you're expecting a rally? Trend? What trend? Where do you see trend? We're up and down 1,500% every day. You think you're saying at 2:00? Yesterday it was not 2:00. We went crazy at whatever in the morning. Okay, so you're using terms I would not use. You're seeing a pattern that at 2:00 we go crazy, and you're seeing that at 2:00 we go up. Why not down? Let's look at 2:00 yesterday. Yesterday was the 7th, right? So this was yesterday. 2:00 is 11:00 my time. We fell yesterday at 2:00. That's 2:00. You will go down. You buy SQQ calls, not puts. TQQ puts. Okay. So I would not use April. I would use today's. And one day does not make a trend. Played, I already answered you on the inverted hammer. I totally addressed it. I switched. How would I interpret it? It's physically telling me there's a seller up there. So I wouldn't go long into it. I would short against it. Here's ET. You closed your puts in KO yesterday, 225 gains. Me too. Mine were a little bit more. But yes, I closed my gains yesterday. YouTube people, you can ask questions too. Oh, you know what? I'm going to go to the place that is full of trolls and maybe invite that one troll that wants to meet me. So maybe you guys see a fight on April 17th. I said, keyboard jockey, see me face to face. He goes, where? So I told him, April 17th, Orlando, noon, town square. No, that rest is I made up. High noon. Luke, I'm calling you out, Luke. Opening range for me is just a period of time in the morning. Lightsaber. Ha ha ha. I'm trying to bring you more people. I'm trying to put eyeballs to people who are not in here. YouTube every day. No, I'm live every day since before the market opens, since 5 a.m. My time in California, but for the members. So don't be a cheapskate. Join the group for a month and you'll see that you will never leave. Scroll up. We have a great group of traders and super nice. They're all supportive and everybody contributes either by asking questions or by set up trades. We have a bunch of fast traders that are amazing. And they don't judge. That's what they're saying. Here, I'll show you. YouTube folks. I need to shut down my PC today. So that's what goes on right now. We just dropped under 300 traders. These are the conversations that go on all day. Is Linda in the group? Yes, she is. You know Linda and you're still not among us? What? She's a superstar. She's our beer money trader. Okay. Earlier today, I shared the head and shoulders concept. It's somebody's mentioning it in private here. So head and shoulders is not a study. So I don't take a trade because I see a head and shoulders. In fact, often people come to me, they say, Nick, do you see the head and shoulders? Saying that basically it says this is still in play. I'll say, yes, but do you also see the inverse cup and handle? Why are you only looking one way? So these are not studies. Like if you see a head and shoulders, don't buy a put. The head and shoulders simply tells you where you can go if it triggers. That's it. It doesn't tell you, oh, that's where we're going. For that, you need other things, either your candles or your harmonics or your wave extensions or your just general thesis. Like if you're bearish because of ABC reasons and you see head and shoulders, you'll say, okay, if I'm right, we are going to end up at that level because of the measurement of the head and shoulders. The head and shoulders being there is not a reason to be bearish. In fact, in this case, I could argue to be bullish as well. So what am I saying? Don't buy a put because you see a head and shoulders, because you're probably missing something else. So what is this? You keep sharing this. What is this? You've shared this multiple times here. What is this? Who is this? If you don't answer me, I'm going to kick you out of here. The other day you came in and you posted this 2 or 3 times. Who is this? Okay. Nobody click on this one. No, I know this person. I just want to know what this is. You didn't post it? What do you mean you didn't post it? It's got your name next to it. No, I know this person. But they're saying they didn't post it. What do you mean? Somebody controlling your computer? Oh, yeah, good. Alive and unstoppable. Join the group. You're going to have a blast. Come on. Do it for a month. Let me know when you get into the group. Oh, shoot. A program downloaded it. Yeah, definitely do not click on that. Please delete that entry. Nobody click on it. Okay, so what you should do, you should run a virus program on your computer. And get it out of there. Not McAfee. There's a program called Malwarebytes. One word. Last time I had a problem, I used it. It's kind of techie though. I think you spell it like that. Malwarebytes. A byte is like 8 bits, you know, byte, B-Y-T-E. So do that. Okay. Keep in your puts for the following reasons. No problem. Sorry you're struggling with that. No, I recognize your emails. Like, wait, I know this person. So here's the statement, and this is not a reason to go short, but a reason to know how far lower can they go. If we lose this green line, if we make a lower low, if we finish my arrow, all of these are the same statement. We could go to 508 today. Think about it. We fell from 525 to this consolidation zone. If we lose the consolidation zone, we should extend in a C leg lower. So ABC, you go from A to B, you consolidate in B, sideways, up or down, you consolidate. If you lose the consolidation, if you finish my arrow, you're going to go to the purple line around 508. So it's worth holding on to that runner. I don't have a reason to believe that we're going to finish the arrow any more than I did earlier. So we are fighting between resistance, the R, the circle, the line, and support, the squigglies, the green line. So we are still in the same predicament. So we need to zoom out or in to get secondary opinions. Let me see if I can get us those, okay? I think the mega caps should be the ones we're looking at, and they might want to pop. So don't be buying puts because of what I just said. Oh, he said 508, let's buy some puts. The odds of this playing out are still right now equal. We have buyers below us into 514, sellers above us through 521. Okay. The direction for the last hour or so is descending. So this is a bearish flag, I guess you would consider it. If the price action was inverted, you'd be all over me. We're flagging, Nick. We're flagging. Let me show you what you would say. If this was the case, you would say, we're flagging, right? Right? That's a lovely term. When we were going up, everybody's bullish. We're flagging. Look at it. We go above 514. We're going to go to 510. Wait a minute. 510 is lower than 514. Yes, because we're upside down. That's what we're doing. We're flagging. So we better hold that floor. You see, when I flip it over and take out all the lines, it looks pretty freaking bullish. Well, it isn't. It's the exact opposite. How do you determine at what level do you have sellers or buyers? Okay, when I say we have sellers here, it's based on the candles. VIX is looking to drop more. Maybe. What did I miss? Who's congratulating? What did Eric do? I missed it. I'm happy today being part of the group for 3 months now. Finally. How did I miss that? What? Thanks, Raul. And great, Eric. It's amazing news. Wow. Man, I missed a good one right there. They're going to get annoyed I'm posting all this on Twitter. I'll probably lose a few followers today. Does it mean the bulls are more in control? Since we are still holding, I don't think the bulls are in control of anything, especially not their emotions. This is an emotional market. They are likely to step on a trap. There's going to be a lot of mines. The bull is coming out of a cocaine stupor. So they are not all there. We haven't had bears in so long, and now we just have panicked bulls. I don't think we have real bears. The bears will be pressing the short here, old school. Like old school, like what was that? The uptick rule? When they took it out, they're like, oh my God, you can't take it out. They're going to kill us when we have red days. What? Yeah, you need bears first to need a rule like this one. Nobody's a bear because we have a fake market to a large degree. Let me explain what I mean by that. Luckily, we do because we can play well within that. We all believe that the Fed can save us because we all are under the impression that the Fed is in control. They are not in control of anything but one thing, two things: what they can buy and sell and the overnight lending rate. That's it. So they're in control of their balance sheet, buying, selling, opening the windows, whatever they call it. They have 80 plus agencies registered who can step up to said windows. We should be screaming about that, by the way. Like, who the hell are these people? And what happens behind closed doors? I would like to know. And how are the feds invested with these companies? Like, any of the Fed members have their money with these entities? Like, if JP Morgan is one of those, is any of the Fed people have their money with JP Morgan? I'm pretty sure they do. I mean, who doesn't, right? If BlackRock is one of them, are they buyers of BlackRock things? Yeah. So that's a black hole. So the Fed is not in control of anything. And people are believing that the Fed can save us. Therefore, they believe that there is a floor. Well, not necessarily. We may break something and end up floorless, and we will end up being assigned $60 NVIDIA puts shares. It wouldn't be the worst thing that can happen, but it could be painful for a little bit. Okay. So we started our descent further to finish our first arrow of 2. About what would that be on the SPY 510? What are you asking? Listen, Linda. Oh, okay. Okay, let me share with you the QQQ target on the, I had harmonics on the Qs. This is the harmonic, and we hit target 1 of 2 just now. Target 2 is 426. It's a 5-minute bearish setup. That's why I told you stay in it earlier. Corey said earlier what he said, and then at one point I said stay short, right? On the Qs. Because of a combination of this and something I saw up here. This up here is probably 50 to 60% of the Qs. That's the collection of all the mega caps that I have. One of them is doing extra work. Who? Not Apple. Ooh-wee! YouTube, do you need more proof that we know what we're doing? No? Then get your butts in the room. Don't take scraps. 1 hour a week, if that. Get in the room. This is 1 arrow of 2. The second, so they're going to try to get back above water, and they'll probably face a lot of resistance here. And if they cannot, that's the path. I'll make that one blue so we can speak to it in color. Cyan. So that's the path. So target 1 met. That's actually half of target 1. Target 1 is at the end of this arrow right there. On a higher time frame, I would stay in the put, especially if it's runners. If it's runners, I would let it run. This is an emotional market. Book profits if it's your only put. Book profits if it's a big win and you need it. To hell with the rest of the winnings. Leave $100 per contract on the table. That's okay, as long as you can walk away saying, I had a kick-ass day. Not an absolutely perfectly timed day, but beat that. Okay. 2 for 2 today. That's great. There should be a bounce, and the bounce will try to get to 516. They will probably fail at 515.5. So they will probably try to trace my blue line. I'm going to put myself on mute a little bit. I need some water. I'll be right back. The interesting part about this fall, if you're looking on Discord where I'm streaming, the sellers above are heavy. So um, I don't think there's stabilization here. 5195 ES has a lot of orders to be transacted. Someone take a screenshot from Discord. So here's the thing, Ryan. You're not wrong with this. Let me expand on this a little bit. It's even simpler than this. Wall Street is not Main Street. So the stock market is not the economy. They are not synced. The economy is what you and I are basically doing, and the collective small businesses. And Wall Street runs on profits from Apple and Google, and yeah. So what you're saying is totally on point, but it's even simpler than that. We couldn't have done today's trade any better. We shorted hesitantly with a credit call spread, but we did. And then we refused to do a credit put spread, which was a good decision. I found these two items, but probably will release my PC. Yes. So quarantined and replaced. Good. Yeah, that software is pretty kick-ass, right? So you should not log into your bank account from that PC or anything like that. In fact, if I were you, I would change all my passwords right now and not use that PC until you clean it out. If you use if you need a quick PC, like my in-laws needed a PC, luckily I was able to fix their laptop. But if they had needed a quick PC, I would have bought them a $200, $300 microcomputer. That they don't need anything more than that. Unless you use Apple, then I think your cheapest option is a Cube, that $600 one. We are in a sell the rally mode, ABC mode. Target is 508-ish. We have plenty of support from the overnight action. We are approaching my target of. So anything below here should not be easy. So you guys are saying we have 2-minute upside, whatever. All fine and dandy. The target should be lower. So we are selling rallies since the high of the day. Look at the scoreboard. We're still up 1.5%. So this is not a red day. We're just not up a lot. That's it. If we have a normal day, that would be great because we are in crisis mode. The VIX is at 40. That's crisis mode. What helps a crisis mode is less volatility, smaller scoreboards. If you can end the day flattish, up 1%, down 1%, way better than up 3%. I promise you. In the long run, up 1% or down 1% is better than up 3%. Because you want the pendulum to slow down. But it's not going to slow down if we're at 40 VIX. Hey, Larry, thanks for the cheer. China decision coming on what? What is China decisioning on? Oh, yeah. Okay, so they're going to say it. So they don't lay down. Even though they lost the first fight, they're fighting again. Maybe this time it's going to be different. Okay, we'll see. They did this in 2018 and they lost. $515 is doable. 515.5 is doable. There should be sellers there. So on top of the blue path, there should be sellers there. Let's see if they can get there. Let's see if they can get above 514 now that they'd lost it. The easy downside has delivered itself because if you look left, this circle from earlier, that's the overnight base for this whole extra rally. They're all so stupid, all of them. Tariff this and tariff that. Just sit down and negotiate, and everything will end. Just sit down and negotiate. Make it a fair trade. That's all they need to do. Thank you. I was going to ask for somebody to bring that in. I'm streaming these 6 windows on Discord. It's an extra tool you don't need if you don't want it, but it's a good resource. Okay, so a while back, I said there's a new tool by Fun with ThinkScript. And in that tool, I put the SPY and I put against it, let me see. Bitcoin. And I said, show me divergence between the risk appetite in Bitcoin and the stock market, and show me when there is divergence. There is divergence here. The last time that came out, we had the rally this morning. It came out pre-open, and now it's coming out. So they might try to reach the letter R from here, is what I'm saying. They're going to try to bounce. First thing is they passed the green line. That's pretty good. 515.5 is where I saw like the blue hump that I drew. This could have been a bear trap, a bull trap. No, bear trap, sorry. Oh, I'm injured. But it's not so obvious because we fell into a prior base. So only silly bears got started at 512. The bear trap is, the process is you defend 514, and then you fall. And all the triggers go. Like if somebody's long, will say, get me out. And somebody that wants to short says, short. Well, I wouldn't short into this. So somebody that buys puts here is not in this room because they're buying a put where we're selling the put. We are exiting shorts here. That's where you buy the put. On the attempt to recover. That's where you exit the long. Not here. If you're long and you're saying, I want to get out from here, Is this your decision, Ryan? Who said Ryan said it, right? China's retort. Was that it? Somebody's going to say, "Oh, it's the headline." And we're going to say, "Is it now?" So how did we know about the downside opportunity? This blue line came to fruition perfectly. Oh, but no, but it's the headline. Look at it. It's freaking perfect. Headline or not, I promise you the headlines do not do anything they're not supposed to do. There are rare ones that do. For example, let's say Powell says they had an emergency meeting. Did they publish the results? Do they publish the results? Somebody follow up on that, please, for the group. If Powell comes out and said, "We met yesterday, we see egregious things happening, we need to act now, we are immediately instituting a QE starting," and they say what it is, and we rally 3%, that headline changes the price path. And that headline is rare, few and far between for on a stock by stock basis. Think about it. How many headlines have you had about Apple that actually changed the P&L of Apple? When was the last time? Very, very long time ago. So all the headlines on Apple are temporary disruptions or whatever is going on with Apple. So China's tariff headline is a temporary disruption. It's not going to say China, we're not going to fight. We give in to all of the US demands. And so if they say 50%, 30%, 15, it's more than expected. It's less than expected. That's noise. It's not news. So if somebody says it was the headline, and then you will say, well, then I must be plugged into CNBC before CNBC knows it's news. Look at this. It's perfect shape, perfect levels, near perfect timing. It'll make it faster. They overshoot, bigger. But most of them, they don't create a new path. Look at this candle and look at this. How long has this been here? You can't make this stuff up. I mean, if you don't think the person showing you this is good enough and then this happens and that happens, you can't make this stuff. You can't fake this stuff up. You can't fake it. It's real. It's in front of us. It's tangible. It's math. It's a self-fulfilling prophecy. Machines need these relationships we're tracking. They need math. They need geometry. That's why we're good, because they're predictable. If you think like a machine, you can predict where it's going, what levels mean more than others, and then you apply other knowledge bases. Like I told you, there's no need to recover any of these. There was no open gaps here, none. That is a masterful job by the bears on the way down. I said that first thing in the morning when we dropped. There is not one open candle that needs covering. Meanwhile, this is full of holes, the one on the way up. We covered it already, this one here. Okay, so now what? Nothing. We are tracking our arrows from this morning. A 5-minute slow poke moved lower. It's taking its time. So the puts might not pay. The credit call spread paid. Time is on our side when we sell calls. Out of the money. I hope that having lines reduces the anxiety a little bit in the room. The level of panic is lower. My account is green today, a lot less green than this morning, which means I am now biased bullish. That hasn't happened in over a year. But with a lot of room to go and only starting positions. And I'm ready to short. Watch how magically we will find footing when JP Morgan decides to close its debit put spread. Or buy back some of its calls that they sold. My God, nobody looks into it. Let's plant that seed out in the Twitter sphere. Somebody will be upset with that. By the way, I did took nice, Corey, nice. High five yourself. Do the fan dance. Let's call it the fan dance. I can just picture you out of your chairs. Oh, that's hilarious. That's too funny. That's too funny. Too funny. If you only knew, people, if you only knew. Oh my gosh, that was so hilarious. That was a good little dive bar. We'll go there again. No, Raul lives in the other end of the world. We're inside the range that we deemed important yesterday. Man, we are on point today. I am so happy with how we covered the room today. It's amazing. Yeah, he's going to try to make the charting class. Oh, yeah. Oh, look at that. I knew that was coming. I knew it. That's why I said half this arrow will come pretty easily if they finish the first one. Okay, G-Man. What G-Man means is that he pinned the action at 5100 SPX by selling an iron condor or iron butterfly. Okay, iron butterfly. See, I know more what he means than he himself. An iron butterfly is a trade that says, I think we're way off. Let's go over there. So you sell calls and puts over there. And then if we go over there, wherever that there is, you make a lot of money by risking very little money. It's like buying a cheap put and you'll be right, except using an iron butterfly method. All right, we're pretty close to target 2 on the Qs. If you're holding Qs puts, I would exit here. If you're holding Qs puts, I would exit here based on my mark from earlier today and Corey's mark and Ryan's mark. Everybody was looking at the same thing. Just joined back. Missed, lost IC, and credit put spread 500. Okay, so you did an iron condor, even though I said no credit put spreads. Bounce here. Why do you ask? I have an arrow that points much lower. I said 508 is my target. Here we are. I've had enough of profits. I would get out of the put. We are in a free fall. The arrows, those 2 arrows that we just filled, we're filling the second one. That's target 1 of 2. Short terms spread, not daily spread. My question is for short term spread, not daily spread. I want to sell credit call spread, not planning right now. No, I usually sell it at, if it's the S&P, single digit delta on VIX this high, single digit delta, you can get $50. Yesterday, the credit put spread was in the 4600s. Was it not? On the SPX? 4670 something, if I'm going from memory, because I had it on my books. Let's see here. Yes, it's closed now, but let's see here. Filled today, SPX. Similar. Look at that. It's back to $35. I forgot what I closed it at. $15 it filled for me. So 46.75 credit put spread for tomorrow or 2 days from now. The 10th. Yesterday gave us $80. So I would sell something like that, Eddie, on rallies. So if I want to trade short term, say 5 minutes bearish setup. Okay, I see what you mean. No, you can use 30 delta as long as you're actively closing the loss like you would buy a put and it doesn't work. It's easier to scalp by buying calls and puts. I see what you're asking, but I have two people in here, at least two people that make six-figure salaries selling credit spreads intraday like you were asking here. Like instead of buying a put, they sell a call spread, 10, 20 units, 30 units, and scalp it within minutes. It's cheaper to do it via buying puts, but if that's what works for them, then I'm not going to tell them to change. I'll be right back. Man, I can't drink enough water today. Must be something in the air. Okay. Let's see what questions do you have. Are credit spreads worth the risk? Profits are limited to the width of the spread. Well, it depends on you. So, of course, they're worth the risk because something extraordinary has to happen for me to lose money. The odds are almost 90% in my favor. If you're good with charts and you time them right, it's nearly it's a rare occurrence where they blow up in your face. So I don't mind taking 11 to 20% of reward if I'm pretty consistent with them. I look at the ES, I look at the SPY, at the SPX. I have about 100 charts open in front of me at all times. So there's nothing I don't look at. And width was $1 on the SPY. Never tried going higher. I don't do credit spreads on the SPY intraday. Like this morning, the market opened up 3%. We sold the call spread on the SPX. It paid $60 to $80 per contract. So that's 13 to 18 to 20% of reward, and it was no sweat. If you did 10 of those, you made $600 to $800, and you didn't even sweat it for 5 minutes. But if somebody did a credit put spread this morning, okay, now they're pooping bricks and their credit put spread is blowing up. So we don't set ourselves up for failure. $508 target met. Look how they're bouncing off the target like mad. Apple reached one standard deviation beyond its width. XLF, oh my gosh. 44 and a half, better hold. 44.3. Then 43 and a half should be solid. Nice work. You're eating into that loss from earlier. Nice work. Thanks for sharing. Apple is red. I'm you about to do the same. Yeah. Earlier, I said something about the XSP trading a lot lower than current price. Okay, so we came down towards it. We're within $3 of that number. Pretty crazy stuff today, but not really because we kind of tracked it. The SPY we use more for scalping, buying calls and puts, and we do that all day if that's your jam. Well, yeah, isn't that what happened the other day? Didn't we fall 16 zillion% based on the tariff headline? So now we have a time that now it's a new threat. How stupid is this market, right? Thank you. Oh my gosh. Okay. So as long as you stay grounded, I'm good with that. My God, those are some kind words there. How do you insert a heart? Thank you so much. Oh my goodness. Let's see here. Later. Enjoy your day. What power? Makes money, leaves, comes back later. I want to buy a put on the SPX. Been watching the 5 minutes. So we just hit my target from about an hour ago. Now you want to buy a put on the SPX. I'm not saying you're not going to make money on it. I'm just saying not an easy entry at this level. If you missed it, it's not a reason to chase it. So you put yourself in danger from here because you missed the other one? I don't want you to wait. I want you to reevaluate and make sure that you have a good reason to chase any more downside from here. That's it. I can justify more downside, but the easy downside, we've tracked it perfectly tick for tick. I day trade micro contracts, but have looked into other strategy. Well, if whatever you day trade, if you're tracking the SPY, S&P, or the NASDAQ, we got you covered. If you want help day trading your micros and you are impressed with the charting skills we have and how accurate we've been all day, join the group for a month and see if it's your thing or not. It's not for everybody, but everybody that comes in here, they never leave. Pink lines around 20. So what did you think those meant, Barry? No, they are not. You are having a hard time interpreting my comments. Okay, so let me tell you how I drew these pink lines. When we were here on my screen, up in this area, I said we're going to try to rally back, and if we fail, we're going to do this. And this is a level of resistance. Here's another level of sellers, and here's another level of sellers. So I said inside this yellow circle, there's going to be a bunch of sellers, as there will be buyers inside this bottom hand circle here. That's what the conversation was. So they were not targets, they were backup resistance to this letter R. So it was a range of sellers. And in fact, we approached one and we said, bleh. So back to this, when earlier today I said ABC, I said we fall from point A, the highs, to B, we consolidate, and we lose the consolidation. We usually go C. So the tail of C does not have to be from the top. Like, you never know. Maybe they're considering from here to here. So we've already overshot that one. So that's why I said 508 is good enough a target for me, especially when 508 also coincides with my initial target one of these two arrows. These two arrows were perfect, freaking perfect. I'm so glad we're recording this, And so now we're falling into a level from last May. So a year old contention level, pivot zone, fight, support, and resistance. We're falling into an area of contention. Recent. This orange box right here, this is a miniature version of yesterday's range. So we are back inside yesterday's range, almost in the middle of it. And so there should be buyers inside this orange box. That's why I wouldn't confidently start a bearish position here at the risk of missing out on much more downside. The thesis that got us here, the easy money from it played out. So now I would sit back and see if I can come up with something else. How big is the bounce if the bounce is to come? Like, for example, NVIDIA 100, solid floor for today. Can it go to 104, 103, 102? How high can NVIDIA go? And then I'll look at other companies. None of the other mega caps looking like it. If you look at NVIDIA chart, it looks pretty weird compared to the other ones. So, is this inverted up here? Did I invert this one by mistake? I did invert it by mistake. I was like, this looks pretty weird. The one up here, that was inverted. I was like, what the heck is going on? That looks weird. Okay, so fake news flash. They hit it, exceeded it, bull trap, back here. Now the bulls are shaken out. There's no confidence in this market because we are pretty elastic. When we are praying for headlines, we have lost our marbles. We are leaderless. Courage is no longer here, and we have no thesis for upside. So the natural propensity to move is down without a savior to step up and say, stop the madness. We're going to a new high because ... Nobody's going to say it. They were gutless on the way up. Nobody would call the top. And they will be gutless on the way down. Nobody will call the bottom. I guarantee it. We had the guts to call the top-ish formation, to say stop being bullish, look bearish. And we will have the guts to say start being bullish. They won't say it. because their business is on the line. I bet you Kramer can say in the morning, I told you to be out of the market because morning Kramer is bearish. I'm concerned. We're opening up. I don't like it. He's wearing a suit. His sleeves are rolled down. He's quiet. He doesn't yell and scream. Afternoon Kramer, sleeves are rolled up, no jacket, screams his head off. Bye, bye, bye. I love it. You're crazy. So he's always covered. He told you on the way up to stay long. He told you on the way down. He told you when to get out. He's covered. You've got AM Kramer and PM Kramer. Later, Deb. Thanks for the note. Love it. Oh, sure. Absolutely. There's no easier way than to just join us for a month. I don't ask for a commitment more than a month. Just join for a month. It's a piddly crap money compared to the hours I give you out of my day. 10 hours a day, every day. I mean, seriously, the money should be way more than that. I have a friend that does exactly this. They charge $350 a month. So this is a drop in the bucket. Thoughts on volume delta? Volume delta. Volume delta. Explain. What do you mean? Let me rephrase these arrows, reframe these arrows. These two arrows are target one. This orange and this orange arrow. So we just hit target one of a 5-minute bearish harmonic that I saw first thing in the morning. Target two is somewhere down here. I can't remember. It doesn't matter. You see all these dotted lines down here? Those are Fibonacci ratios, lines, confluence of Fibonacci levels from multiple extensions. Kind of like what the Fibonacci queen used to do, Carolyn Borodin. Love her concept. I don't know if she's still around or not. Also look left. There's all the action from yesterday. So it should not be easy for us to slice through all of these. Buying a put here, you better be a momentum trader. In and out. Volume delta is a trading view indicator. Volume delta? The big volume spike on buyers and sellers. Oh, a change in volume. Yeah, I have that built into here. Wait. Yeah, here. It's the orange X's. They show up when it's you can set it. They show up when it's 2x. I made it for myself inside of TradingView. I don't use it a lot. I'm not a volume guy. I'm a guy that puts arrows based on shapes and levels and volume be darned. Time, price, opportunity was a good indicator. Time, price, opportunity. Whoa, fancy. What does it do? Another text from Benzinga. This one is for Chris Capri. Crashing markets equals massive opportunity if you know how to trade it. Chris Capri reveals it Wednesday at 6. I thought I was Wednesday at 6. Maybe not. Okay, I don't need it, but it's good to know that there's one out there. I would not pay for a volume profile other than what is available with the platform. Like on Thinkorswim, it's free. If you're on Thinkorswim, I use TPO profile better than the volume profile. TPO. It looks amazing. Okay. It's free. Don't pay for it. It looks like this on Thinkorswim. Small account or not, good job trying. Once you establish a process there on YouTube, you can then dial it up. So at a glance on this chart, for example, I can tell where they like it. Like I can tell that around 91.6, there's a big fight, 91 to 91.6. So on the way up, anything above 91 is going to be a struggle. Just from these past 3 days back here. And this one. Like it's important that they close above 90, whatever this is. Oh, TLT. Yeah, there you go. You're not on Thinkorswim, but it's free on TradingView. Well, it's not free. If you have a pay program on TradingView, then it's free. I don't think the TPO profile is any different. They give you any different information. I mean, I can try to build one here, but I think it defeats the purpose. Premium only, but what do they give you other than the volume profile? What's premium about it? Show me a picture. Why is it premium? This is target 2 on the queue. Target 2. Target 3 is way lower, like 419 or 418. I don't know if we can get target 3 today, but that's what it is. When you say Animesh, it's premium, tell me what it does. Show me a picture. Jake, if you bought calls on the VIX and you made money, exit. Between here and 52 is an exit spot. Okay, good. I'm intrigued because I may be able to copy it for you and give it to you. Missed target 2 and 4. Okay. This is target 2 on the Qs. 5-minute harmonic that was bearish. You see these 3 red lines that say resistance? We cut through them and now we're below all 3 of them. Yeah. So target 3 would be below the green line. I don't think we can go there easily. I would not buy a put here. I would close my puts right here. At the risk of missing target 3, I would close my puts here. The only way I would stay in the puts if it's truly a runner, like free paid for. Starting puts here is putting yourself in danger right away. You could make money, but it's a tough work. Credit put spread, somebody's asking me. I can give you one, but I would not touch it. Apple. Whoa. Okay, let me describe the price action in Apple. So I have a study that measures the last 30 days, open to high, open to low, and it uses that as a range. So it's a pretty wide range. Well, Apple just did that and went standard deviation. So it's basically and past that. So now they're past the 1 standard deviation, inching on 2 standard deviation, which I don't have a measurement for. Suffice it to say, Apple is in extreme range conditions. Microsoft just hit that 1 standard. You've been out since 508. That's perfect. So you didn't miss much. So let me go to my spreadsheet. Yep. That XSP was not lying. It was not lying. What was the high of the day? 525. It was not freaking lying this morning. I said there's a bunch of money transacting below, and the highest put was $12 below, whatever that dollar amount I said on the SPY. Bam. Delivered. The power of options. Well, now one would think that we would want to try to get back to 5100 on the SPX, unless they're going down to 50-50. Either way would be fine with the market makers, I think. 5100 would help them not pay out puts. 50-50, they would be okay with it because then they can kill a bunch of calls and puts down there. So Rally up to 51 or drop to 50-50. If I was a market maker, that would be my call. 50-50 is 3 SPY dollars lower, so 503. Sold. Nice work. Nice work. And thanks for sharing chart information. When I can rely on you guys as charts so I don't have to do it. Like yesterday we were bullish and you posted a bearish comment, but your bearish comment was based on a higher time frame. So I was like, okay, we have our trade, it's working. Make sure to scalp it because we also have the other bearish trade that is outside. So we can help each other see different time frames. That's how it works. What do you mean? Sorry about that. I'm saying thanks for that. Looks like those tweets about tariffs going into effect at noon was another false report. Oh my God. Oh my God. Well, that doesn't make sense because if it was a false report, they would bounce, no? Right, exactly, Maria. This is what I said. That's exactly what I said. So yesterday they cared about the headline that just regurgitated itself, and now they care about how much, and now they care about what time. What what does it matter what time? Like 30 minutes are gonna make a freaking difference. 30 months wouldn't even make a difference. Beto, I'm waiting. The Payush, remind me about it, okay? If Beto loses 1620, it goes to like 15 or 14, so I'm waiting. Yeah, who cares? Who cares? This happened. So this is the playbook of 2018. I've said it like 100 times. You guys were not trading. Some of you were not trading in 2018. I promise you, word for word, like word for freaking word. I told you I used to carry a spreadsheet for the members because they were that freaked out. I had a spreadsheet because it was us in China. It was fairly simple. I'm trying to remember the numbers. Something like 245 versus 385, where we were slated to lose 245 or whatever the number was for the US, but China had the bigger chunk to lose. And I was like, China, you're being silly. You've got so much more to lose than the US, even if you both lose 100%. And now it's probably more of a fair fight because a lot of business left China since then. Yeah. No, I just ordered something from AliExpress, and nowhere was it more expensive or it's already shipped and it's on its way here. Business continues to do business. So one thing you guys don't know is that companies will operate at a loss in order to service their debts. That's the oil company mentality. Like when oil fell to 50, companies that needed 70 to break even continued to pump oil and sell it at a $20 loss so they can pay their debts, service their debts, the interest. As long as they can create enough cash and borrow and all of this to keep afloat until the price rallies back up. So, what I'm saying is that in the end, the tariffs will be absorbed by everybody and we will be moving on. The supplier will take a hit, the buyer from the supplier, the reseller will take a hit, the consumer will take a smallest hit, in my opinion. Like people are saying, oh, the dealers are happy because they're going to jack up their prices on the cars. I said, first of all, don't ever go to that dealer that says it to you in your face. That dealer is screwing you in your face and they don't care. Go to a different dealer, buy from a private party if you're buying a used car, or lease a brand new car. Car dealers, they make their money on the service. So if you know high-end dealers, their service department, the good ones, is 125 and they're nut. So they're profitable 25% just from their service. Any car they sell at whatever price is extra gravy. That's the dirty math on the super high end, not super high end, like a Lexus, a Mercedes, an Audi, those dealers. Now, Billy Bob down the street dealer, avoid. Buy from private party. But those high-end dealers, they have a very static formula. They can't mess around. Inventory is key. Without inventory, they're dead. Used car lots are key. Without that, they're dead. The new car store makes its money from service. Any new car they sell is gravy, so they will sell it at a loss. So if sales are not flying out the door because they have to jack up their prices because of tariffs, they're going to drop their pants, and then they will have the sales. So don't buy into the narrative that you hear on social media. They are not experts. I know this because I did business with dealers. I was a dealer at one point just to do. They won't allow you to do business with them unless you're licensed like them, which was pretty cool. I drove a car for 2 years with no plate, not like a temporary plate, nothing. I had no plate on my car. Not one time did a cop stop me. No plates, no front plates, no back plates. It was an IS. What was it? What would they call 350? 350. 250. IS 250. I drove it with no plates. Not one cop stopped me. 2 years. It was great. Hey, Rafal. Got you. Can you explain your look left to trade right concept? Absolutely, Bryce. I love it. Somebody's asking about the meat. Okay. So in this case, we're looking at my screen. If we're falling, before I do whatever I want to do, let's say you get the harebrained idea to go long or short, just look left and see what happened the last time we were here. And ask yourself, if I ask this person that's about to do that did what I'm about to do now, like if I'm looking to buy a call, ask this person, how did this work out for you? They'll say, hey, not bad. You're not making an easy mistake. If you're buying a put here, ask this person, how did it work out for you buying a put here? To be honest, it wasn't the best. So this here is not an obvious entry point to short, even if we're falling that fast. This here, if I'm looking to short, I would wait for more upside and short into that, where it has worked out for the put buyers. Simple concept like that. Does that answer your question? Yes, this box right here, this was yesterday's meat and potatoes range. As we approach these colorful dotted lines and these two green support lines and the lower half of this orange box, the downside should be labored, not easy. Not easy. So we are selling rallies. We are uniformly selling rallies. So one silly thing you can do is you can copy paste behavior. So this is what's going on, right? So let's see if it repeats itself until the behavior changes. Apple bounce. Apple hit the floor. Any trade for today? You can try your luck with a credit put spread. Let me see how low we can get you one. Let's see here. There are 22,000 contracts transacting at 5,000 puts. The SPX 5,000 for today. 14,000 at 50/50, which is we're approaching. I mentioned it earlier. The 500 put on the SPY, we have 118,000 transaction. We have 125 at 505. So the easy fall has played out. There is upside pressure. I don't have enough courage to buy a call with conviction, but I could provide you a credit put spread if you want. And it's probably going to be in the 49.80 area. Let me check. 49. Wow. 49.65. 49.50. 49.50 SPX credit put spread is still paying more than $50. So let's go here 5 minutes. I'll give you a visual. If I sell the 49.50 put and buy the 49.45 put, I collect $50 or so. All I need to win is for price not to fall into me. See this? We said vulnerable 1 and 2. They played out. They filled the gap. 49.50 credit put spread will do you. If you haven't done those before, please don't take more than one contract. And you should recognize that you're risking about $400, $450, depends on how much you collect. It's a 13 delta. That's pretty high. Any magnets? There are no magnets. The magnets, there's a lot happening at 501 and 500 in terms of dollar amounts. So you can consider that as a magnet. Mike, did I miss another one of your questions? I see you deleted something. I'm new to trading and I'm working on learning which of the ETFs and indices, a combination of them provide insight into the projected volatility. Okay, so I'm looking at UVIX. Okay, I'm going to simplify it for you, really. Can you hear me, first of all, the whole 9 yards? All right. Okay, no problem, Mike. I'm going to make it really simple. I think you got it backwards. Volatility, if you're looking at it from the VIX complex, it's the tail. The dog is the SPX. So I don't know if you know this. The VIX, the VIX, is calculated from the pricing of the options in the S&P a month out, 28 days. So you're looking at it backwards. The VIX is a symptom of the level of concern by the market makers who sell the options. So if I were you, I would just look at the VIX itself and use it in the following logic. As long as the VIX is 40 or above, nothing is normal. My level of conviction gets cut in half immediately. Like if I think we're going to rally because of A, B, C, D, and normally I'm like, yes, I'm buy a put, buy a call. I'll knock myself down a notch. I'll make my bets half as big because we have the headline threat, which is manifesting itself by a high VIX. The VIX is high because the market makers don't have a clue. So they want to charge you insurance prices. When you go to buy a call, when you go to buy a put, they want to get their money's worth. They want to cover the holy crap moment in either way. So they'll charge you a lot. if you're a 16-year-old boy going to get insurance from Allstate, they're going to look at you, and profile you as high risk, charge you higher interest rates, higher insurance rates. Well, the VIX now is doing that to the buyers of calls and puts because they're judging everybody as being irrational. So don't bother with the UVIXI and the SVIXI, VIVIX. They're all derivatives of the VIX. Look at the VIX, use it with the logic I'm saying. Next time the VIX falls down to below 16 and 15, consider buying some to protect your portfolio. It was the easiest trade on the planet. We did it here. It yielded, 1,000% over time. It never lost us a nickel. And it was a blind long. We sold puts to buy calls. It was just a free long. It was just I can't wait for that scenario to come back. I mean, how easy was that? It was amazingly easy. Look how they're tracing the prior price action almost exactly. This thing, that's a ghost print. I just copied what happened here and moved it over. Very well said, Arlenis. Yeah. Can't wait to get to the level of VIX again. Yes. It's able to gain a bit from it. The logic of insurance is an amazingly simple concept, but that's how it is. So when we buy calls and puts, when the people buy calls and puts, bigger people with bigger bags of money, calling themselves market makers, take those bets. They sell you the call, they sell you the put, and they sell this person and that person and that person and this person of various levels. Their concern is they want to collect enough to, in the end, have enough losers for them to come out net profitable, right? So basically, the straddle dies. So when they don't know what's going on, they're going to charge a hell of a lot more, 3 times more than normal. The concept plays itself out on earnings. If Apple's options are $200 for a call at the money on any given day on a Friday, and on the week it's reporting earnings, it's $600, that would be normal because there's an earnings report that might cause a move bigger than, quote, the normal range of Apple. So the normal $200 is now $600. That's why you buy a call and the stock rallies and you go, I'm not making any money. Because the next day they take out that premium pretty quickly. There's no mystery anymore. The headline is out, back to normal. Yes. Yes. A flat day, a minus 1% day, a plus 1% day is what the market needs. It does not need a plus 4% day. I told you that it embolsters, is that a word? It encourages people to feel better about things, and they bury themselves back in calls and credit put spreads. In fact, a couple of you asked me a couple of times today, can we do a credit put spread? And I kept, no. And also, you want to break the VIX down. You can't break the VIX down if you're having plus 4% days. That is volatility. Okay. Whew. What a day. What a round trip. At least we saw it coming, right? And we avoided chasing it at the wrong time. And we made money off of it on the way down. So it doesn't get better than this. And now we can just sit and enjoy the coffee, twiddle our thumbs. Can you look at Apple? Sure. Oh, Lord. Yeah, Apple. Somebody shorted Apple this morning. Who this? Somebody here said, I'm going to short Apple. Somebody in here. Yes, it was you. And this is where you get really paid if they lose 174.50. Nice work. So there should be a bounce here or an attempt to hold and bounce. If not, 66.69. 75. No, 74.60. That's the last bounce from yesterday's low. Yeah, the question came like maybe even pre-open or straight out of the open. I do remember asking. I said, yes, you can short it against, and we talked about a top. Apple is nasty right now. So like with Microsoft, I have a floor from pre-open at 350 plus whatever happened yesterday. With Apple, nope, they puked out all of the floors from the pre-open, like big time. Apple is China related, and Apple is so here's the thing with Apple. I said that yesterday. If indeed we are repatriating manufacturing, if that's the goal of Trump, to bring back manufacturing to the US, stop this nonsense of going to, assemble iPhones with $3 an hour. And Apple says, yes, I'm bringing back assembly into the US. That's going to hurt their margins. So I've heard Tim Cook before say something like, there's confusion about cheap labor in China. That was his comment. I can't argue with this comment because they've been in China a long time, so they must know the labor market. But you guys may be able to, Freddie, you might know more about it than me. His comment was that it's not cheap labor, it's the abundance of skilled labor that does what. So I was like, at first, I was like, did you just call all the workers in America stupid? Or, and then he fixed it because he expanded on the idea. He said, you can have 30 people here, you can have 300 to 500 people there available to do the job that they're doing. So I don't know if I believe it totally, but if that's the case, then Apple is going to be up creek if they force him to come here and assemble, if he's not lying. I think he just inherited the format and he just too gutless to change it. He's changed nothing about this company except borrowing money. That's it. That's the only innovation he did. The only new thing he added to the company after he joined is he borrowed. When he took Apple over, I believe it had zero debt on its book, not $1. Not that it has a debt problem, but that's the only change in its P&L, not P&L, balance sheet. I know somebody that hates me saying that is now digging up their balance sheet to see if it's zero debt. I dare you. Go back. Look, pull up the P&L, pull up the balance sheet before he took it over and come back to me and prove me wrong. You know that on a mission, somebody's out there. That mofo. I'm going to prove him wrong. Do you remember SPY spiking to 524, then sell off back to 504? Do I remember? Yes. I remember you calling for 539 today or something like that. I also remember that. Oh, okay, Al, thank you. We have an exclamation point on this statement. Al knows. What happened to 534, Jax? Yeah. You know why? Because he was there when Apple was struggling. At one point, Apple struggled, right? Remember, the Steve Jobs gave them or lent them 100 million or something like that. And not sorry, Bill Gates and Steve Jobs had to introduce Bill Gates on one of their events. It was like gulp. It was not a pretty sight. And so he's obsessed with hoarding cash and being financially independent forever. So I think that's where it comes from. Okay, so you see how they're tracing out what I drew here? This thing? So now this shape, this descending wedge shape, they tend to snap out. And if you're short, I would be out, even on this last leg. These shapes tend to do these. So it's not that we're going by a call, but we're in an area of support and it's a zone. Look left. This is the base from the overnight lows. Sorry, from yesterday at the close. Um, Remember, we nailed the drops and the rallies, so we're at the base of a solid base we're into a solid base from yesterday. So we did not have good incremental news today, and we did not have bad incremental news today. So logic says that the easy fall is out. We're in the middle of a range that is tradable sideways. The VIX is at a range where it says, I'm going to break out. Why would the VIX break out now? I would not be in puts right here. And if I haven't sold that credit put spread, if I haven't closed that credit put spread that's in trouble, and it is still statistically viable, I would stay in it. This is not the place to cower out of the longs yet. 500 is a nice round number, and it may be a magnet because it's a nice round number, but I don't have a magnet pointing to it. I do have 133,000 transactions there, but I also have 144,000 transactions at 505 on the puts, on the SPY. 50-50 came and went, right? I said if I'm a market maker, I either run up to 5,100 or drop to 50-50. Boom. We are literally dead center of yesterday's wild ride. Literally, right now. The wild ride, like the wild ride. Let me show you in a minute. I'll show you on the ES. It's really easy. I don't think I can paste on YouTube like that. No. Where is my platform? There it is. That's the largest green candle there is right here. Let's see if they lose it. So here's a trick. 502 must hold. You lose 502, you're going down to 500.8. Exited my lotto puts from earlier. Nice. 347%. I did mention your lotto earlier. And about to reshort this pop. I wouldn't hold anything overnight. You're too good to hold overnight. That's gambling. If you're that good with charts, you do not need to hope for an overnight move. You're that good with charts. The only way you would hold overnight, the levels are on point, that's amazing, is because you see something on a higher time frame. And in this day and age, you will have a headline disrupt it for you. So even then, just cut it to size. Oh, that's amazing. Thanks, Yazan. I appreciate it. That's why you signed up for a whole year. Confidence. Yeah, but now I think they're going to defend 502. If not, they'll go to 500.8. TLT lost support. That's significant. That one trade paid for 5 years. What? I need to charge you more. So go ahead and donate something to someone. Even if you know somebody in Lebanon, you want to just send them some money. You know they're broke over there. The banks are broke. So if you know anybody in Lebanon, send them a couple of $100. It'll make their month. You don't even have to be related to them. Oh my gosh, yes. It'll just make their life. $300 monthly, and not only that, what your dad didn't tell you is whenever you do withdraw the $300 a month, the limit, they charge you like 10 times more. They draw down your account by like $3,000 at sometimes. My mom is there. Her money has disappeared. Yeah. Best day ever from Tom. High five. Just shorted the SPY with puts on each bounce and covered at round numbers on probability of bounce. I am out watching on for entertainment only. Yay. That's freaking amazing. What a day. Man, that's my win for the day. I mean, my account is those messages today. Phew. Do I use intrinsic value to make my trades? So I don't know how to answer that one. I know options inside and out. So everything I draw, everything I do includes all of my knowledge on options, which includes what do I do, what do I buy, what do I sell. So it's part of the decision making process, but I don't use it to structure my trade specifically. So if I'm selling something, I rarely like to buy. I prefer to sell. If I'm selling a put or a call, I decide where it's at based on my knowledge of intrinsic and extrinsic values, delta, and the gamma, and all of that. So, yes, I do, but it's not a driving factor. It is definitely a huge part of the equation. Will I recommend it for a beginner? I don't know what you mean. So, what is it? To know what intrinsic value is, I definitely recommend you get familiar with the process. Yes. So, you need to know the Greeks in a way they teach them, but I promise you, they're teaching you enough to take your money. You need to learn the Greeks the way I teach them, and that would be 2 days of classes. I have some shares of RUF RJF from my old workplace. I would like to hang on to them foreseeable future. I failed to hedge. I have the capability to short XLF. Puts are so expensive. Would it be better to short XLF or buy enough puts? RJF puts. I don't know what RJF is. That's a loaded question, so I need to get familiar with RJF before I answer. So the concept of the intrinsic value, to put you on the right path, is when you buy an option, how much hope are you buying versus how much meat are you buying? So the bigger the intrinsic value, the less of an option it is. It becomes like a stock. If you buy a 90 delta, that means the call on the call. That means the call is way, way, way deep in the money. Might as well buy shares. Because if the stock price moves one, the option moves almost one, you might as well be in shares. Okay. So I don't like to buy no intrinsic value. Then you're buying all hope. When you buy a lottery ticket, you're buying a very low delta, you're buying all hope. So there's a good balance between hope and meat. Find your sweet spot. I don't like to buy hope. I'll sell you hope and buy meat. That would be a debit call spread, right? Call vertical spread or diagonal spread. So if I want to go long a stock and I buy at the money, which is 50%, 50 delta, I'm selling hope shorter term, higher level to somebody who has unrealistic expectations. So that's the concept. You don't buy hope unless you have a really good reason. And if you do, I would usually buy a higher delta than no intrinsic value. There's a good balance between the two. The Greeks are silly the way they teach them, but the concept of the Greeks is essential. Once you get a grasp, you cut away from the way they teach it because they teach you enough so you become a lifetime consumer of the information rather than a market maker. Once you see it like they do, you become a market maker. Then you would say things like I would say, I prefer to sell things than to buy them. Selling a 495 put on the SPY credit 80%. Is this accurate? I would never sell a naked put on the SPY in this environment. Talk to people who got assigned things and margined. They will jack up the margin on you 3x. Talk to Chewy, unfortunately, a good friend. Him and I have flown together. He got pinched, so the trade is fine. The trade is fine, but they force you to act to cover their butts. They force you to buy protection, close your trade, move it. If you're lucky, they'll let you move it. But this is a lesson that I learned long time ago, and I tried to pass it. Don't sell naked puts on the indices. Okay, so fine. I gave you my opinion. You're going to play with fire until one day maybe you get bit. So, yeah, I'll give you a scenario. You sell a naked put, and whatever happened the other day happens live. What do you think happens to your put? It goes from $3 to 16. So what I'm telling you is I prefer selling a put spread. So go with your idea. I don't mind your idea, but here's another idea to overlay it. Go lower and buy something like I call them sacrifice puts. So your idea is good. You're timing it right. You have support and all of that. I don't deny that. But what I want you to do is control the loss and tie the broker's hands. So if you sell a put naked and something bad happens and they jack up the margin requirements, you're stuck. They'll come to you and say, you need this much, and this much is a variable number. If you buy a sacrifice put, which could be pennies, Raghu does it all the time, I think. If you buy a sacrifice put, you limit the amount the broker can say you need to bring in X. Now, X is a finite amount of money. And if you're okay with that number, they don't give a crap. Do you understand? I don't want you to stop from trading your idea. I just want you to have control of the holy crap moment so that they don't sting you, especially if your idea involves an overnight situation. Loss was, I'm understanding. I don't know. Well, say that again. You came to me with a naked sold put. Your loss is from wherever you sell the put all the way down to zero minus $3.78. So yes, if the S&P goes to zero, you lose 48,000, 49,000. But my take is that they force you to take a loss even though your trade might survive. What if your trade gets pressed but still survives, but the broker says you got to close it? So you say, no, it's going to win. They say, I don't care. You have too much loss. You got to close it. But if you buy a sacrifice put, they won't say that. It's a finite number. They'll leave you alone. Then you'll manage your trades as an odds of success and your loss is limited. I understand, but I'm giving you the information. I think that was a teachable moment. There you go. Mission accomplished. Like, I don't mind selling a put naked in a stock, even though the loss is all the way down to zero in theory, because I can calculate where my zero level is on that stock. Like, I'm pretty confident $60 AMD sold put is not a grave mistake for my health, financial health. I bought 505 put at 7 yesterday, averaged through, followed instruction, walked away. Profits? Oh, okay. Nice. So you managed the situation that was pretty awful this morning. Nice work. High five. See, that's confidence right there. Managing a bad situation. I hate typing. That's fine. You got your question across, and hopefully I gave you enough information to absorb. I know, I understand. I'm saying high five yourself for taking that information and building on it. I meant it. That wasn't not sarcastic. No rambling. So by you asking, I bet you a dozen people learned something, at least a dozen people. So you just contributed to the knowledge of other people. I see what you're saying about fib levels, that overlay. I had a prior yesterday, 61.8, that overlaid with today's 23. Pretty close. Yes. So it's just a self-fulfilling prophecy. That Carolyn Borodin was pretty logical person on CNBC. I don't know if she's still there. Fibonacci queen. That was her concept. Like, I don't need her for anything else, but the concept of overlaying Fibonacci levels is great. She would lay on, like, I don't know, 5, 6 different, and then delete all the ones that are one-offs and then keep the clusters. Nice going, Sai. All right, so Tesla could be interesting. There's a scenario, a low scenario, that it's below 215 in the next few hours. 215. On very wide iron condor, sell puts and calls and buy and sell. Well, an iron condor is by definition that. If you're not buying sacrifice puts and calls, you're selling strangles. I don't like to do those short term on the SPX, especially for people who don't know what they're doing. I don't mind you doing it if you know what you're doing, but in this day and age, I don't like to sell $10 wides or wider iron condors that are based on delta only. Where is the Chase hedge levels again? Rephrase. Do you trade futures for SPX 0DTE? I personally don't trade 0DTE SPX futures, which are the S&P futures, but you can, and that would be circumventing the PDT rules. Didn't JP Morgan? Oh, the hedge. Okay, so let me reword. Where did the Chase? You meant JP Morgan. Okay, JP Morgan. It's not Chase. It's JP Morgan. Where is the hedge? The hedge is 50, 40, 44, 5,044. This is that red box. 53, 20, 44, 80. They got paid a zillion. That's one part, and that's the sold call. When we were rallying that one green day, and I told you, why are you guys looking up? You guys are looking up on the day where the largest, most respected bank on Wall Street sold naked calls just above current price by 4.5%. You think they're idiots? They're not. They got paid already big time. So that's the hedge. They're in the debit put spread. They sold 40,000 calls. They bought 40,000 debit put spreads. So they're definitely profitable on here. But this is a hedge. So I don't know how they manage their hedges. Are they die? They stay in it even though they got paid. If I was them, I would close it and reset it because they already got paid. And the fact that they don't close it should scare people because it's not at maximum gains. First of all, it has almost 3 months to play out. And the spread itself is not all in the money. It's inside the spread, but we're not inside both legs. So even if we fall below their bought put, the bottom of the box, with 2.5 months to go, they wouldn't get $5. They would get maybe 3.7, 3.5, 3.8. So they would still have 1.2 to materialize. So if it's a true hedge, they'll keep it in place. How do you know the JP Morgan and where do you see this? Open your options chain and go to the levels that I just mentioned, June 30th. Let's do it together. Oh my gosh, with these guys. One second. I'm trying to open an options chain that is easy to move around in. The Tasty Trade one is awful. It lags. Let's see if this one is any better. So we want to go to June 30th, not July, June 30th. That's the quarterly. You're looking for 40,000 calls. Sold. And they should be up in 5,300, we said. So you scroll up to 53. They should stick out like a sore thumb. By the way, on that day, I sold a call spread here live with you. I said, let's modify this. I modified it a lot. I don't see them. Okay. Let me go verify the number. 59. Okay. There they are. 40,000 contracts, 5905, expiration June 30th. Okay, today there was 146 transacted there. Now, the price for those is $19.50. So as long as time is ticking and the SPX is not above there, they still can make $1,900 per contract. Then they have 40,000 of those. So that's the level of hedge that they have right now. $19. Let's round $20. Okay. That's a lot of money. Not maybe if you consider their whole portfolio, but that money helped them buy a debit put spread that is $53.20. There it is, 53.10, not 20. 53.10, there's 41,000 puts. That's them. And that spread is I can't remember. Hold on. 44.80. That spread is $260, almost $260. $260, and they have 40,000 of those. So they're making a schmut ton of money there. That's their hedge. And the trades are still there. I can see it. You can see it. Just go to your options chain, put in SPX. That works. But put in SPX and go to June 30 and go up and down, and you'll see it. Okay, so Tom, I was going to tell you what your options are here for going long, what you're seeing. So there is a trade. If the bulls are able to take out this prior fail right here, if they can only do this, the trade setup would be a cup and handle. Now, I thought I had a breakout here. Breakout, yeah. So having a cup and handle is not a bullish thing. So having a dip and another dip, if this plays out and they take that out, they can go up to 516, 514, 516. That's the target. Having this situation up there is not a reason to go long. That's to tell you how much opportunity you have if you go long here and we rally. So now you go and find reasons to go long if we have one. So if we can hold this little wick, 504.5, maybe we can pop. So let's find a reason to go along this candle and that candle. Those are two big candles. Let's see if there is a reason to go along this candle and that candle, because that's a good base. So that's a confirmed. So okay, I want to stay above this candle type of a statement right there. This tiny little wick here. So see if anybody can find it. But if we lose this one, that whole thesis goes shaky right away, because hey, you just told me you're going to stay above these candles. Yes, but I've been beaten down so much today. I'm tired. That's the bull saying that. So this is a pretty shaky scenario where you go along with an immediate stop, and the stop should be based on money or if you lose that candle. So let's see this play out. Let me see if I can get you a reason to be short somehow else. No, it's not an easy long. On the 15 seconds, it might be a better entry at 503.50. So don't buy a call with confidence. And if you did buy a call, please be very reactive to it. I think we have a dip, another dip, if we don't break out. So buy the call, yes, but be accepting of red. So Here's what an order should be like. When I'm bullish, I open a long if I decide to. I have to decide where I would stop out. In this case, I wouldn't stop out before this level of red. And I would want to make as much money as I'm risked, at least, right? 1 to 1. So that is a structure of a trade. I go long, I'm hoping to get out into the stop box, and I wouldn't stop out unless we lose this red box. That would be a structured order. Question: how do I enable volume weighted candles on my chart? Up here, you choose volume candles. On Thinkorswim, they're called equivolume. One word. They made it up. Equi, like equine. I'll be right back. So getting long here is not wrong. I just drew the visualization of might happen. So just be aware of that. And now I'll be right back. Yes, he is muted. Okay, YouTube people, I'll give you 3 minutes. I'm going to cut you off. I need to pay attention to the gang. I was saying about Beto. If Beto loses 1623, I think the stock market is in deep trouble. What? What does Beto have to do with the stock market? Remember, Bitcoin is risk appetite gauge number 2. I bet you the VIX would be at 60 again. It measures global risk appetite. All right. Signing off. YouTube. Where is my thing? There it is.